Hi everyone. As we approach the Lunar New Year, in this video I'll be summarizing some of the most frequently asked questions over the past year related to trading and investing. We'll go through them together, analyze them, and build a solid knowledge foundation for the upcoming year. These may not be textbook questions, and sometimes it's hard to know where to find the answers. They're often based on real-life experience. Whether you are a short-term trader or a long-term investor, these are things you need to understand. Let's get started. The first question that many people wonder about is, what will the market look like in 2026? Last year was a highly volatile year. Most financial markets, such as stocks and cryptocurrencies, experienced strong growth. After the COVID pandemic, many countries printed more money, which caused cash to lose value compared to other assets. However, no matter which market or product it is, once it grows strongly, there will eventually be a downturn phase, sometimes even like a bubble bursting. No market can grow forever. If you look around, not only stocks or crypto, but also other markets, such as orchids, ornamental plants, coffee, pepper, pork, and so on, when they suddenly surge, they will also eventually decline. Growth may come from supply and demand factors, especially in commodity markets like agricultural products, coffee, pepper, rubber, etc., or it may be driven by certain forces we don't clearly know, pushing a product to surge sharply in a short time, like cryptocurrencies. But regardless, when some people make profits, others will take losses. After a growth phase, always comes a decline phase. If prices kept rising continuously, who would be left to buy at higher prices? There must always be someone buying high to provide liquidity for those selling at that level. FOMO doesn't only happen in financial markets. Whenever we see others getting rich from orchids, pepper, or any other product, human psychology makes us want to follow. But by the time we join, prices are usually already high, and we often end up buying at the top. After everything is prepared, the price drops. In the current situation, since prices have already increased significantly over the past year, if we continue buying now, two scenarios may occur. Either we gain a small profit for a short time, or prices drop deeply. It is unlikely for prices to continue rising strongly after such a long upward phase. Therefore, this may not be the best time for long-term investing. It might be better to wait for deeper corrections over a longer period. When everyone has forgotten about the market, that may be the time to participate again. If you still want to make profits even during a downturn, then you need to trade. Trading allows us to profit from sell positions when the market declines. The second question is, can the knowledge shared on this channel be applied to stocks or cryptocurrencies? The knowledge I share is based on the fundamental nature of markets, buying and selling, which forms price, and price is represented on charts. Therefore, it can be applied to any market that is chart-based, including stocks, cryptocurrencies, forex, commodities, metals, and so on. As for the best time frame for trading, it depends on several factors. First, it depends on which time frame suits your personality and schedule. If you have limited time each day and slower reaction speed, you should choose higher time frames, such as 1 hour or above. This means fewer trades and falls under swing trading. If you want more trading opportunities and have more time, you can choose intraday time frames like 15 minutes or 5 minutes. However, I do not encourage trading on the 1-minute chart because it requires very fast reactions and strong emotional control. Another factor to consider is the spread, the difference between the buy price and the sell price. In forex, this concept is common. In crypto or stocks, fewer people mention it, but it still exists in all markets. For example, if the bank's gold buying price is 160.5 million VND per tau and the selling price is 162.8 million VND per tau, if you buy and immediately sell, you lose 2.3 million VND per tau. The more frequently you trade, especially on smaller time frames, the more you lose in fees and spread. Therefore, I recommend trading at least on the 15-minute chart or at minimum 5 minutes. The next question is, how many currency pairs should you monitor and trade? In crypto or forex, it's best to start with one pair. In any field, it's better to specialize in one thing before moving to the next. Practice one method on one pair. Backtest it and evaluate whether it produces good results. After practicing for a long time, you'll better understand both the method and the characteristics of that pair. Only after mastering one pair should you move to another one and repeat the process. Observing more pairs gives you more opportunities, but it also requires more time and reduces your ability to control them effectively. So while there are advantages, you should not monitor too many pairs. Ideally, no more than 10. The fifth question is, what is the most important factor in becoming a good trader? The most important factor is not the strategy, it is discipline. Even if you don't have a perfect method at the beginning, if you consistently follow correct principles, such as always setting a stop loss and calculating position size properly, you may not win immediately, but you will avoid heavy losses. Most beginners fail to follow rules because of emotions and greed. They enter trades randomly without control. Only after experiencing consequences do they begin to change. Try giving yourself a rule. Enter trades with a stop loss equal to your take-profit distance, 1-to-1 risk-reward. Follow any reasonable method, and once you enter, do not interfere. Let the trade hit either stop loss or take profit. Use a demo account or small position size and maintain this for 20 trades or a few weeks. It may not make you profitable immediately, but it will train your discipline. Later, when you have a solid strategy, you will be able to follow it. Many people constantly search for the perfect strategy but fail to follow it. Even the best strategy will not help if you can't stick to it. The sixth question is, how can you avoid taking profit too early or holding losses too long? Again, it comes down to discipline and having clear rules. If you do not have a specific rule for entering and exiting trades, emotions will always dominate. To avoid holding losses, you must always set a stop loss. To avoid taking profit too early, you must define clear profit rules, such as targeting the nearest resistance zone or a fixed R multiple like 2R. If you are new, use fixed rules for stop loss and take profit, and once the trade is placed, do not keep staring at the chart. Watching the chart too often leads to breaking discipline. Write your rules clearly on paper or in your notes. Backtest them first. You will make mistakes in the beginning, that is normal, but by doing it repeatedly and reviewing your trades, you will learn and improve. The goal is not to always be right. The goal is to gradually reduce mistakes over time. The seventh question is, how can you recover a losing account? This is a very common question. The truth is, if your account is currently down, it means you have already lost that amount. For example, if you bought one Bitcoin at $100,000 and it drops to $90,000, you are down $10,000. Even if you haven't closed the trade, at that moment you are effectively in a losing position. The future price movement is uncertain. It is like entering a new trade at $90,000. It may go up or down. The idea of recovering an account is misleading. If your account is down $1,000, you have already lost that $1,000. You must accept that reality. That is why setting a stop loss is extremely important. Finally, the eighth question, what is the best trading strategy? A trading strategy does not only include entry rules. It also includes exit rules, risk management, and timing. There is no such thing as a perfect strategy with a 100% win rate. If a strategy had a 100% win rate, it would mean you never lose, and such a strategy does not exist. For example, if you randomly enter trades with equal stop loss and take profit and ignore fees, your win rate would theoretically be around 50%. To increase your win rate, you need additional rules to filter out low-quality trades, such as trading with the trend, identifying clear structure, or avoiding ranging markets. The more bad trades you filter out, the higher your win rate, but the lower your trade frequency. For example, one strategy may have an 80% win rate, but only generate 3 to 4 trades per month. Another may have a 60% win rate but generate 9 to 10 trades per month. Both can be profitable. You need to balance win rate and trade frequency according to your personality. One important requirement of a good strategy is to avoid sideways, choppy markets without clear structure. In such conditions, price often moves back and forth, easily hitting stop losses. Clear trending markets are generally better for trading. That concludes this video's frequently asked questions. Of course, there may still be many other questions you have. Feel free to leave them in the comments, and I will try to answer them in future videos. Wishing you a prosperous and successful new year full of happiness and achievement. Goodbye, and see you again.